Hey traders, welcome back. Shane from GMT Futures and FX. What we're going to have a look at is we're going to have a look at our continuation trade 200 at the moment. So there's two types of trades that we can take with our continuation setup. There's an aggressive trade and a conservative trade. So I'm going to just walk you through both. I'll walk you through the aggressive version first, and then I'll probably do another video on the conservative one because it's going to take a little bit of time to get through this one. So what we're looking for now, the key things for us to look at are that I'll quickly break down the chart. We've got a 5 brick Renko custom Renko here. So basically we've customized the Renko chart. It's a 5 brick. If we go to format symbol, you've got in there on the DAX trading a custom Renko 5 brick with a 1 brick offset. We've got 2 months worth of data loaded up here. But the key here is that the thing about these custom Renko charts is that you get the wick. You're getting the wick, so that's improving the overall accuracy of your testing. So anytime you're looking at testing or running Renko charts, you always want to have the option to have the wick there because that's going to give you a more accurate result. The other thing that helps us with Renko charts, obviously it does a really good job of cleaning up price action, and that's what we love. So let's walk you through what we have on the chart here. Now we have our proprietary indicator, which is our dynamic support resistance. That's this indicator here. You're seeing the, and I'll turn it off for a second so you can kind of get a visual as to what it is, and then I'll turn it back on. We've got a fair bit on the charts at the moment, but let me just pull that support resistance off for a second, and you'll see it disappear. It's gone. So you can see there we don't have the dynamic support resistance, and we put the dynamic support resistance back on, and it makes a massive difference because that's really one of the keys to the success of this strategy. So there it is back on, and you'll see it starts to come up and identify potential areas of or turning points in the market, or areas of resistance or support where we can potentially set up high probability trades. So the first thing we need to look at when we're looking at our strategies, we need to determine the trend. We use our 200 period moving average to get an initial guide of where price is, because we want to see what kind of a trend we're in, whether we're in a trend, whether where we've got price trading between our moving averages, or we've got an established trend. So you can see here early action was that the trend was up. All our moving averages were kind of lining up nicely. The 20, the 50, the 200, and the other indicator that we use is our VWAP, which is our volume weighted average price. So it's basically the volume weighted average price is the ratio of the value traded to the total volume traded over a particular time horizon. So for us, the time horizon is a day. So to put it simply, it's basically the average price weighted by volume. So for us, the VWAP is really a guide for identifying areas of support resistance and telling us where the value is in the market. So one of the things that we want to do is we want to see whether price is trading above our VWAP or below. It's showing us where the value should be in the market and where price is. And conversely, if we're buying the market and price is below the VWAP, then it's showing us where price is and where it potentially could be. So it's a really good value measure as well. So not only support resistance, but a good value measure. So what I'm going to introduce you to is our 200, our 50, and our 20 period moving average. They need to be in line with each other to show a trend. So when we get a trend change, that occurs if all of our indicators are stacked as they appear. So what we want to see, the fastest moving to the slowest moving in that order, and stack correctly, and then obviously we need to see price below our VWAP too. So we've got a trend change here. We've gone from a long trade to a long trend setup to a short selling trend. We've got price below our VWAP, we've got price below our 200 moving average, we've got all our moving averages lining up. And then we get what we call a retest. So we get a push through, an initial push through of the 200 period moving average. We get support set up. Then we get a retest of this 200 period moving average. But what happens is that our critical indicator, which is our dynamics resistance, that comes into play. So that indicator tells us that we're hitting substantial resistance. We're right on the VWAP, which we know acts as a period acts as a place of support and resistance, and that's resistance there, and we're just below that 200 period moving average, and there's our resistance as well. The other things that are clues for us here on this continuation trade 200 are that we're rejecting the 200 period moving average. We're definitely overbought on the on that run up, as you can see here from our RSI. We've also got our MACD BB turning red, and we're starting to lose the momentum there as well. So that's all a contingent short setup. Now, what we don't have, and leading up to this, one thing I forgot to mention is we had divergence here in our RSI leading up to this push down, so it meant that we were always going to get a push back to retest that 200 period moving average. What we don't have though is we don't have a retest of this level. So when we look at taking a trade off the 200 period moving average, we need to see all of these things lining up. We need to be overbought, we need to see divergence previously set up, we need to see our dynamic resistance set up, we need to see price pushing back below the 200 period moving average, and ideally what we want to see is we want to see some divergence. We don't have any divergence, so this is actually a fairly aggressive trade. We don't have a retest as well, so the two things that we're missing, the two critical elements, we don't have any MACD divergence and we do not have a retest of this level. So this would definitely be an aggressive setup. An entry price would require us to trade below there's two ways we can get into this trade. We can either close below the 50 period moving average, which is our yellow moving average, or we can take the first trade candle, the first pivot turn bar, which is there, and that would be our entry. Now our stop is always going to be slightly above, one or two ticks above the high of that highest point in the move, and you can see here that price does fall away, but as I mentioned before, there are two entry options. One is to close below the 50 period moving average. The other option for us to take this trade is to get more aggressive and take that first turn bar. Now, that's an aggressive setup. So what that means is that prior to taking this trade, you've already decided that you're going to be an aggressive trader because your strategy settings are applied and you're trading the system based on your testing. So if you are trading the continuation trade, you've already run your strategy test, you know what your win rate is, you know what your reward to risk is, and ideally when we're running these trades, we're running a reward to risk of 2 to 1 or better. Our target should be 3 to 1, but at 2 to 1 we're looking to get to break even. And always when we take these trades we need a minimum price move, so we don't want to be locking in profit or moving our trailing stop too early. But we also want to know what our initial risk is and make sure that that risk is fixed on the trade and that it's not moving, it's not expanding in any way. So it's a fixed risk. So that allows us to then qualify in our testing and our trading where we are at 3 to 1. So we can automatically vet the trades that give us our 3 to 1 on our reward to risk. So that's how we take the setup. So as I mentioned before, it's fairly simple. We've got VWAP rejection. We have rejection from the 200 period moving average. We have our resistance set up. We were overbought. We've gone to an overbought area on our RSI. We've got RSI divergence coming into that trade, but the two things we don't have, which would have been ideal, would have been a retest and a MACD divergence. Now, to trail this, the trailing stops we can use, obviously we can use our moving averages as a trailing stop, we can use our 50 period, our 200 period, we can use the outside of our price channel as a trailing stop, or we can use the standard GMT trailing stops that we have available. But either way, this turns out to be a very, very nice trade on the DAX. So in my next video I'm going to talk about the conservative setup, so looking at that retest of the support resistance. So I hope you've enjoyed the video and I look forward to catching you on the next update. Cheers.